Imagine a financial sector that reaches further than ever before. Imagine a bank that accepts everyone, no matter how small your needs may be.
So many people out there don't know how successful it is and what a difference it makes.
The poor represent a very dynamic sector in which one can do business very profitably.
This is a film about the investment potential and success of microfinance banks in Africa.
This is not a commercially insane idea. This is the most commercially sane idea. And the wonderful thing about it is you're making a real difference, and it's proven.
Even the fact that only 5% of the population in African countries benefit from the formal financial sector, the microfinance industry plays a critical role in that it provides the remaining 95% with the financial services required to transact and to create wealth and therefore grow out of poverty.
Traditional banks have requirements on their clients that less than 5% of the sub-Saharan African population can meet. The vast majority of Africans have no access to the financial sector. People who are more than ready to climb out of poverty if they are provided access to banking at their level.
When I came in Nairobi, I struggled very much.
Microfinance provides people a safe place to save money. It also provides loans to people so they can start or expand a business.
Microfinance institution is financed through equity, part of the ownership, the contribution of the owners, and debt, which is funds that are borrowed from the public in the form of savings or borrowed from local financial institutions in the form of a loan. When, for instance, if you take a small institution in rural Tanzania, this institution will solicit capital from investors, so the investors would put funds into the company as owners. Those funds will be used by the institution to build branches, to hire people, to train their staff, which in turn enables the institution to reach a greater number of individuals and provide to those individuals both saving services and credit, debt provision, which in turn enable the institution to give an opportunity to all of this population to grow out of poverty and therefore have an impact on development.
Capital injections from investors are needed in order for microfinance institutions to sustain a growing infrastructure. Additional branches can be launched, which means more people get access to banking services. This results in more clients saving and taking loans, making it an ever-growing business.
A woman told me there is an organization and I'll take you there, then you'll see whether you can join the organization. So I saved 50 shillings for 1.5 years and I had saved 3,500. So from there, I started my small restaurant. From there, I returned the money back. Then I took another loan of 20,000, and from there I started another one. So from there, I had 2 restaurants. I added my profit, so that's the time I started another business of video show. Then I repaid that back.
In my group, we took 10,000, and we all used that money in a very good way. We got into the business of motorcycle, and we are doing well. We have been doing well. I'm planning to change this business into a taxi.
It's a great deal because they are doing something that they were not able to do before, and they are doing something that is going to help them in the future or even in the present, because you save and you get a loan and you develop whatever you're doing.
New and rural branches often consist of an office linked to the headquarter by modern mobile technical support, such as GSM applications capable of handling and logging all client data onto a central server, allowing access to data anywhere. This innovative technology has dramatically cut the cost per transaction, making it possible to operate at a very efficient rate even in remote areas, providing the basic services you would expect from your local bank.
I think it's much Now this devices plus this phone actually is your full-fledged branch. You can do all sorts of transactions on this mobile. A receipt can be printed out on a receipt printer here. It has a fingerprint authentication, so you can also authenticate the customer.
It is just like a computerized savings. It's a bank today.
The major disruptive technology in the microfinance space is going to be the mobile phone, because that is the cheapest piece of technology. It is ubiquitous, everyone has it.
It serves a couple of things. One is obviously it reduces the cost per transaction. The second one, it extends your outreach. And the third one, it brings accountability in the financial standards.
You know, the pipeline started off with just one very small product, and now we're watching a widening of the product suite. So it's a really attractive moment to be looking at this business, because it was relatively simple. Now you're getting much more stuff coming down the pipeline. You know, whether it's insurance for the family, or housing.
Microfinance institutions in Africa need long-term capital, patient capital that comes in the form of equity, part of the ownership of the company, and that shares the mission of the microfinance institutions in that it has to have developmental goals. It just so happens that most of that form of capital comes from the West.
An international investor really have a role to play on that industry today, by bringing not only money, but also a means to support infrastructure and bringing human resources on board.
What was really tragic is at the bottom of the pyramid, people wanted to squeeze out very high margins. But actually, if you scale the bottom of the pyramid, you look at a more of a micropayment type of model, your returns are extremely handsome.
Given our populations and the population growth rate, not only in Kenya but in other African countries, I see microfinance growing in terms of the numbers of people they reach, in terms of the amount of money that will be invested in microfinance.
Kesha nile umepata ni mzuri sana, sababu karibu hapa ni soko, na ukiangalia upande huu unaona hizi.
The microfinance has been able to reach those people who in normal circumstances are not able to have regular banking facilities, and it's a big business.
Microfinance is investing in building a financial sector targeting the poor, offering support to a growing financial infrastructure, ready to realize the full potential of the 95% still lacking financial services today. The race has begun. Africa is taking off.
I look at this as an enormous tool for good. You know, it works, it's creating entrepreneurs of people, it's empowering people, they are paying you back.
It's becoming a mainline business, not just in the region, but globally.
I know we are going to go into greater heights as a microfinance, and still I can call it as a bank, still do better than we are doing right now.
God is good, because now Joyce is not poor. I'm a rich woman now.
You know, hundreds of millions of people around the world lack access to financial services. They are very ready to get out of poverty through hard work and by making use of the opportunities offered by microfinance banks. And the needs are enormous. As responsible investors, we can develop banks that meet these needs. And the market potential is huge. I can't really think of an investment that has a stronger blend of financial and social return.